Aashish, hi, good morning. Good to have you on the show. Apologies, got a little delayed coming to you. But just wanted to understand, Aashish, what really is the retail behavior indicating? Because, data suggests that in the June series, we've had the best series so far this year for Nifty Bank and the second best for the Nifty. Smart recovery, Aashish, from where we were at in March when we struck those lows. Has retail participation as well changed in any way?
Yeah, I think, if you actually see typical behavior, clearly March and April, everybody was extremely concerned. And if I go by my past experience, as the market is, showing a significant recovery, and, now let us say at a worst point in time on a 1 year basis, people must have seen massive double-digit negative numbers on their NAVs. Whereas if you see right now, it might look like a single-digit negative number because of the recovery that you just mentioned. So typical behavior, if I just extrapolate from the past, the typical behavior is that when people see a restoration of values, they are more likely to kind of bolt for the door. So that is something which I would really watch out for when the June end numbers actually come out. And also, there is this general belief that July, August, and September are going to be important from a economic reality perspective, data sets coming out, etc. So what I sense is that people are a bit circumspect at this point in time, and there is a lot of wait and watch kind of behavior which is going on.
Sure, absolutely. But what one has seen, at least in terms of the market pricing, Aashish, that it's not just the benchmarks, but you've seen a strong recovery coming in the mid and small caps as well. We were just debating as to whether or not one should buy into those small caps or not, because, the kind of names that have been running up or have all of this past month smacks of a little bit of exuberance. Even penny stocks have risen, for instance, just so much. Do you believe that this outperformance of the broader markets is here to stay, or do you think if the markets were to stall or consolidate, that entire uptick is going to cave in?
No, I would say that if you look at, say, mid caps, for example, certain sectors, let's say, for example, people have been speaking a lot about pharma. Now, a lot of domestic pharma companies are actually mid cap companies. If you see, there is a belief that, say, for example, at least I think that some of the fear on, say, banks is probably overdone. A lot of these are actually mid-cap banks. If you see, for example, for example, there have been discussions that auto is one of the sectors which could actually, see a revival, because even before COVID, it was going through the doldrums, and a lot of auto ancillary companies are also mid-cap. So I would say that better not to generalize this, about small caps and mid caps. I appreciate what you mentioned, that a lot of penny stocks have started flying. I'm not very, very clued on to this, but my sense is that somewhere in 2018, a lot of stocks were put into those 5% bands. And few days back, there has been a lot of relaxation as far as trading ranges of a bunch of stocks is concerned. I think that might have brought some liquidity back in. But I would refrain from believing that, the broad market rally will get put off or something like that. I think that there is still a sector specific or a stock specific play, which is definitely available and which is definitely possible, at least as far as the mid caps are concerned.
Aashish, hi there, good morning. What's the outlook when it comes to autos? Because this has been a troubled sector. Add to the woes, of course, the lockdown and the COVID impact. Do you believe that one needs to be very selective when it comes to autos?
Yeah, when you speak to experts and when you do channel checks and, when you listen to commentaries which are coming on from some of the leading companies, especially two-wheelers, there is this sense that there is a incipient demand which is kind of coming back. One needs to see if this is just an initial, coming out of the lockdown kind of demand, or is it going to sustain? So one needs to watch for that. But the early signs are saying that there was this pent-up demand. And, because of BS4, BS6, because of insurance cost escalations, so many issues which have plagued the industry since middle of 2018. I think any which way there was a massive degrowth in sales, and there was a consolidation in some sense. And my sense is that it is something to watch out for. And like I said, the early signs are looking good. One needs to watch out for sustenance of what we are seeing right now.
You've been talking about the pharma space as well and how one can look at that selectively. There has been a lot of gush of activity within the pharma space as a whole. But then, do you think that this would perhaps just be short-lived in nature, that there is a lot of risk as well that comes with picking out pharma stocks? How much of an exposure do you think one should have to pharma in the portfolio, and where is it that you're finding confidence?
No, look, we've been owning domestic pharma stocks. I think it's not new, frankly, across our mutual funds and PMS portfolios, depending on individual portfolio managers' preferences and what suits their mandate. Anywhere in the range of about 9-10%, right up to 18 to 20%, has been there in portfolios, I think, for quite some time now. So, frankly, from our perspective, and at a point in time, we have suffered also. So let's be frank about that. And it's not something which started as a COVID specific thing. I mean, yeah, after COVID-19, because of the news on different types of drugs and different types of manufacturers, there has been a kind of revival of fortunes. Plus, of course, you are seeing better activity as far as the compliance approvals and FDA related actions are concerned. So that might have clearly brought the sector back into focus. But as far as the domestic companies are concerned, as far as some of the mid-cap stocks are concerned, and our portfolios are public, so it's evident what we own. I think that is something which we still find that there is potential in it, and we will continue to maintain what I mentioned, anywhere in the range of 10 to 15%, maybe 18-19% on the higher side. I think that will be a consistent exposure as far as we are concerned.
Deviating a tad, Aashish, let's also get in a view as to, the international funds, because we have seen a lot of interest in some of these. What is your outlook at Motilal Oswal AMC? Because that has been an offering that has existed for quite some time. How should investors approach this category?
Yeah, I'll be frank and honest. I mean, we've been having these, at least one of the most say popular funds, which is NASDAQ 100. We have been having it since 2012, but it's got a lot of attention in the last, say, 12 to 18 months. Now, look, ideally speaking, let me put it forth that people should be having international funds in their portfolios for very basic fundamental reasons. And I put these reasons into three parts. One clearly is that you should look for asset classes which have low correlation or no correlation if you want effective diversification and reduction of risk, or reduction of volatility in your portfolios. So one is the need for having low correlation. That is one. Second is, clearly if you see some of this low correlation also happens because of currency, because the Indian currency over the last 20 years has consistently depreciated 2-3%, and last 10 years it has depreciated at an accelerated rate of about 4-4.5%. So, stuff like having low correlation assets, stuff like currency diversification, and also quite importantly, you need to have these funds because you would like to access certain companies which are otherwise not even listed out here. So how do you reach out and invest in those companies which you are, let's say you're well acquainted with those companies, you can see their growth potential, but you have no way to access because they're listed outside. So of course you will have to invest outside the country. So let me put it this way, there are fundamentally sound reasons why people should have money in international funds. And we have such funds right back since 2012. But my current fear is that instead of the reasons which I am narrating out here, I hope and pray that, the love for international funds is not coming just because last 1 year India has done, or last 2 years India has disappointed. So, it's like if it's a rebound, I think it's not going to serve people well. If it is done on a fundamentally sound basis with appropriate understanding and expectations, then I think it might work out well for people. And if there is a gun on my head and if I have to stick my neck out, I would actually say that in the next year or couple of years, there is a more than equal likelihood India will outperform some of these markets. So people should be very clear why they are investing in these funds, and the reason should not be last 1 year numbers.